I found Rhythm's view on Indian markets also, interesting enough to talk about. Is the Morgan Stanley India strategy. He's saying valuations, trailing performance, the macro positioning and the growth cycle all signal improving stock returns in the months ahead. Now, this was in contrast, I would say, to some extent to what CLSA was saying and some of the other global brokerages are looking at in terms of India. So this is definitely more positive and optimistic, as we often see from Morgan Stanley. Growth signals, he says, we are ahead of consensus and expect positive earnings revision. In terms of RBI policy, we think will support liquidity and loan growth. Policy reforms, several measures including privatization are likely underway. Forthcoming union budget could also contain capital market reforms. India-US trade deal and a lowering of US tariffs on India. FPI positioning remains near lows, but net FPI buying will need growth to recover. Downside risks arise from slowing global growth and worsening geopoliticals. He prefers domestic cyclicals, defensive and external facing sectors. Overweight financials, consumer discretionary and industries, underweight energy, materials, utilities and healthcare. Meanwhile, as far as markets are concerned, wait and watch phase following 2 days of profit booking from record highs. Long-term trends though remain intact. Technical setup suggests a buy on dip strategy near the 26,000 mark. The index slipped below the earlier support turned resistance trend line near 26,200, though it continued to trade above all key moving averages. Market experts maintain that as long as the Nifty stays above 26,000, the structural bull run is intact. A decisive close below this would be the first signal for a deeper correction towards 25,600. Supports at 26,100 to 26,050. Resistance 26,300 to 26,350. For the Bank Nifty, supports at 59,700 to 59,800. Resistance at 60,400 to 60,500. So watch out for some of those levels as well.